So, morning everyone. My name's Tom Leahy. I work for Real Capital Analytics here in London. I guess most of you involved in the property investment market in some respect or other. So you'll know who RCA is. But just to recap, we're a data and analytics business. So we have a database of real estate investment transactions that goes all around the world. I focus on Europe, and today I'm going to be using the data from our investment transaction database to run you through some of the the top line trends in the Nordics market, Nordic markets. I'm really going to focus quite a lot of my presentation on what the cross-border investors are doing and where they're spending. So without further ado, let's kick off. So just a bit of housekeeping. Most of the numbers I'm going to show you are going to be in euros rather than having to convert everything into local currency and show lots of different slides. So most of the numbers are going to be in euros. Investment transactions of 5 million euros and above is what we capture. So this chart shows investment in the Nordic markets, annual transaction volumes in euros going back to 2007. And you can see that 2016 was a record year for the market in terms of the amount of money that was spent by investors. It was a record year in Sweden, in Denmark, and also in Finland too. 2016 investment volume slightly down in Norway in euro terms, but a very strong year for the market. And if we think about which segments of the market investors have been looking at, where they've been spending the money, you can see I've got the top 10 here. Stockholm offices, unsurprisingly, the biggest segment in the Nordic markets. Interestingly though, investment in Stockholm offices was around its kind of 10-year average in 2016, whereas if you see the rest of the segments we've got on the chart there, I think every single other one of them well above average in terms of the amount of capital that was going into those markets. When I pick up on Copenhagen apartment, a significant amount of capital going into the residential market in Copenhagen. So where's that money coming from? This chart shows investment volumes into those four Nordic countries split by the origin of capital, and very clearly you can see it's Nordic investment that's really driving that growth in investment volumes. So Nordic investment volumes, I think 85% of the market in 2016 was from Nordic players, and whether that's domestic money or intra-Nordic cross-border flows, so Swedish investors buying in Denmark, buying in Finland. Which kind of bucks the trend that we've seen in a lot of other European markets, certainly in markets like the UK, in the Benelux markets, in Germany, where we've seen increasing cross-border interest. And when you look at, excluding those Nordic investment volumes, when you look at investment by players from outside the region, it actually tailed off in 2016. What's also interesting on this chart as well is you can see the sources of this capital. So the UK has been the biggest source of ex-Nordic money going into the region over the last 10 years. After that you've got the United States and then Germany. But pretty conspicuous by their absence from this chart are some of the Asian players who've created such a wave, I guess, in some of the other Northern European markets. You've had Korean players buying in Germany, a lot of Chinese and Hong Kong money coming into the UK, and both those players buying in the Netherlands as well. But we haven't seen that money coming into the Nordic markets. So a drop-off in investment volumes from ex-Nordic players in 2016, not just in aggregate terms, nominal terms, but also as a proportion of the total amount of cross-border capital that is being spent in Europe as well. So that proportion peaked in 2015 at around 9%, but has slightly trailed off since. So that suggests that cross-border players are maybe having some difficulty in deploying capital into these markets. And just to evidence that, this chart shows our investment holdings. So these are properties that are in our database that we've seen transact at least once in the last 10 or even 15, 20 years. Split by domestic, so domestic owners in blue, other Nordic owners in light orange, and then the rest of the world, rest of Europe in dark orange. So you can see very clearly how domestically orientated the ownership in these markets is. Certainly in the case of Sweden, I think that structure will put it as probably about the most domestically oriented market in Europe. And you can see I've got the European average there, just to provide a bit of contrast, around a 50-50 split in in Europe as a whole in terms of the split of ownership of commercial real estate between domestic players and overseas players. And just to further evidence this chart looks pretty similar, but does have a different data set. This shows the seller-buyer relationships in deals that we've recorded over the last 12 months. So you can see in Sweden, 60% of the deals that happened in the last 12 months, a record year for the market, involved one domestic player selling to another domestic player. About another 25% involved cross-border players selling to a domestic player. So that reduces cross-border interest in that market to only around 15%. But if you look, left on the chart, you'll see Denmark and Finland, significantly more cross-border involvement in deals on the buy and the sell side, closer to that European average there I've got on the right-hand side of the chart. I think one thing to point out, though, is that a significant amount of that cross-border interest in the other Nordic markets is really from Swedish players. So if you look at the top cross-border player in Denmark and in Finland over the last 5 years, it's been Swedish investors. Taking this group of overseas money, which markets have they been targeting? You can see, probably chiming in with what that previous chart showed you, Copenhagen has been the top market over the last three and a half years for overseas money, ahead of Stockholm, which is certainly a much bigger investment market but much more domestically oriented. And then going down the chart there, you've got Oslo, which saw a big peak in 2015, and that was really to do with movements in the Norwegian currency, which I'll show a chart on a little bit later. So a decent amount of capital going into these main Nordic A cities, but also what we've seen is a significant amount of investment going outside, the main Nordic metro markets. So this shows cross-border investment split by those main cities we just showed you, and the rest of the market. So non-metropolitan locations and smaller cities. And you can see there was a really pretty large spike in the amount of capital that was going into these non-major metros from sort of 2015 onwards. I know it's tailed off quite significantly since, but that was really where we saw a big spike in cross-border interest. So I guess that raises the question of why is that? Why are we seeing greater interest, or why are we seeing more capital deployed by cross-border investors outside the main metro markets? One reason might be that maybe they're having difficulty accessing stock in the major metros. So this is a similar chart, I guess, a different way of showing the holdings data I showed earlier. So this is taken from our website. This shows all the blue dots are properties where we know the holder of that commercial real estate is a domestic player. So significant concentration in central Stockholm. When I shift that to show holdings by cross-border players, you can see the number of blue dots disappears or reduces significantly. So maybe there's difficulty in accessing some of that stock. Maybe there's a pricing opportunity as well that these investors spotted. So this chart shows average transaction yields taken from our database, split by the main metros and the rest of the Nordic markets. Now I appreciate the lines are a little bit lumpy, and that really partly reflects the amount of information we're capturing, certainly on the yield level. But you can see very clearly there's a pretty significant gap between what investors have been paying for stock in the major markets and what they're paying for outside. And certainly investors are cognizant of these pricing opportunities. So, as I mentioned earlier, the Norwegian story, we saw a very significant uptick in cross-border investment into Norway in 2015 when the Norwegian krona devalued significantly against the US dollar. So there's actually a very high correlation, a 0.8 correlation between movements in the currency and the amount of capital that was going into Norway. So that shows that investors are looking for opportunities in these markets, and when they see maybe a pricing opportunity or an opportunity to access stock outside the major markets, they're taking it. Because in the major markets, prices have increased quite substantially since their last peak. So this chart shows our commercial property price indices. This is a new product suite we've been working on for about, I think, probably 2 years now with academics from University of Amsterdam. And this is a repeat sales transaction price index. So it tracks the change in prices of assets over time. So you can see the Nordic A cities here in the blue, prices around 20% above their previous peak back in 2007. So the markets are certainly much more expensive than they were. In terms of where they are now, they're on a par with Paris, more expensive than German A cities relatively, just below London. So that's the prices being paid. And just to look at the yields as well. So these are top decile yields, so the top 10% of the office market in the Nordic region over the last 12 months. We can use as a proxy for prime, really. So we're saying top decile yields around 3.75% in the Nordic markets, and that's well below the historical average, around 100 basis points below. So the markets have been getting more expensive. Investors are cognizant of opportunities, and when you look at what buyers are saying, are investors interested in these markets? There's a lot of capital clearly in European real estate at the moment. So this is just a graphic I stole from the ULI Emerging Trends report that they published at the start of this year. The green lights, or the green blobs, basically indicate that investors are looking favourably on the Nordic markets. You can see that again clearly here. 4 of the major Nordic markets in the top 20 in terms of investor preference in Europe. So investment volumes from cross-border players have tailed off slightly, but when you're thinking about how much capital is in the market, demand for European real estate as a whole, this chart shows real estate allocation by investors. Most investors are still saying they're underexposed to real estate, and I think some of that capital will find its way into the Nordic market.